Hey everyone, welcome back to Corporate Decoder. Today, Worksport Ltd just filed a current report, and the key takeaway is a strong gross margin that is catching attention. Quick note, this is not financial advice, just my take on public filings for educational purposes. Worksport is signaling impressive profitability on its sales. And a new distribution deal could really boost future growth. Alright, let's dive into this report from Worksport Limited, a company in the auto parts sector. This is a current report, essentially an update on something significant happening. The filing is dated the 22nd of June 2026, and it covers information that is new and important for investors to know. The main event here is that Worksport put out a press release on the 22nd of June announcing some pretty good news. They're highlighting a 35% gross margin for May, which is a really solid number, and they've also landed a big distribution partner named Meyer Distribution. Plus, they're now targeting over $36 million in annual revenue, which is called a revenue run rate. This press release is the core of this filing. While the report itself is short, the press release attached as an exhibit contains the meat of the update. Let's break down what that press release is saying. A 35% gross margin means that for every dollar of revenue Worksport gets from selling its products, 35 cents are left after paying for the direct costs of making those products. That is a healthy margin, especially in the auto parts industry. For context, if a company has a really low gross margin, say 5%, it means they have very little room for error to cover other costs like salaries, rent, or marketing without losing money. A 35% margin gives them a lot more breathing room to invest in growth or handle unexpected expenses. This kind of news often explains why a stock might be performing well. The fact that they are landing new distribution partners like Meyer Distribution is crucial. Think of it like getting shelf space in a major retail chain. Meyer Distribution likely has a network of dealers or customers that Worksport can now sell to, significantly expanding their reach without having to build that network themselves. The target of $36 million plus in revenue run rate is also significant. A revenue run rate is an estimate of a company's annual revenue based on its current performance. If they hit this target, it would represent a substantial increase in their business. Looking at the context, Worksport's market cap is around $12 million and they have 116 employees. This target would mean they are aiming to more than triple their current market value in terms of annual sales, which is ambitious but achievable with strong partnerships and good product demand. The filing also lists other exhibits. Exhibit 104 refers to an interactive data file, which is standard for modern filings. Finally, the report is signed off by Stephen Rossi, the Chief Executive Officer, confirming the accuracy of the information presented in the filing. This is normal procedure for these reports. So, what is the story here? Worksport is clearly making strides on several fronts. The 35% gross margin demonstrates strong pricing power and efficient operations. The Meyer Distribution deal opens up significant channels for sales growth, and the revenue target shows their ambition. However, investors should always look deeper. While this news is positive, it is important to remember Worksport's market cap is still relatively small. Around $12 million, companies at this size can be volatile. We also have to consider their past performance. Recent news from May indicated that Worksport reported a first quarter loss and missed revenue estimates. This press release appears to be addressing those concerns by highlighting the positive momentum in May. The real question is whether this momentum can be sustained and translate into consistent profitability, not just good margins in a single month. Landing a distribution partner is a great step, but it takes time to fully capitalize on those new channels. We'll need to see how these numbers hold up in future reports to confirm if this is a turning point for Worksport. What I am actually looking for is consistent profitability and not just a good margin month. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like this video, comment below with your thoughts and subscribe for more. Join our Discord community linked in the description.